Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver prices are reliant on gold and where gold is headed to in the near future, which will highly determine and reflect where silver is headed. And this could be good or bad. For the sake of this video, we're going to analyze this, break it down, and share my perspective. So before we start, make sure to smash that like button, subscribe if you're new because I post daily videos. So I covered a couple of articles and some charts based on why silver is reliant upon gold. If you want to check that out, it's my last video. But now I'm going to share my perspective on this and opinion. I think that this is going to still hold pretty strong for silver. I don't see things getting too much worse. I mean, it could become murky waters for a period of time. Not saying that silver is going to bottom out at $13, but it could get to low 17s, but that will just mean better buying opportunities as we can lower our dollar per cost average. Now, even if it does get to that point, the charts show that there still is a huge potential for upside or an uptrend, even though it has been in the downtrend for the last several days or weeks. But I'm not saying that silver needs to be, lower or needs to be higher, because I think it's sitting comfortably at this price range right now. Obviously, it's extremely undervalued, and given all the factors and the different things in the economy happening, it's going to influence prices. But I really want to talk about what's influencing silver's price, because yes, I watched this video about on Kitco, actually, on their YouTube channel, and they were talking about silver's price in influences is much simpler than people think. And when I was watching it, it made me realize that sometimes things may be in effect, but it doesn't mean they always will. Just like historically showing, things that affected silver's price over a period of time might have been motivating or gained more momentum for the prices earlier on than they still do, and sometimes these things actually lose their luster, no pun intended, for momentum or gaining. So we can't always incorporate these same price factors or the variables in something like that. So when they're talking about silver or relying on gold, this could be good because gold is, or silver is, gold's little brother. So when you're trying to look where prices are headed, or if you're trying to incorporate, your stacking strategy in the next chart or whatever the case is, usually you can tell where silver is heading by looking at gold. If gold's going up, then silver will usually start following suit in the next couple weeks. It's always been like that. And the same thing happens for the downside. If gold is going down, it usually shows that silver will in a couple weeks. It always follows a little bit afterwards. But when is silver going to start outperforming gold? That's another question I want to bring up in this video. Because yes, silver is always going to follow gold around to some extent, but when is silver going to break apart and break through its own type of market? When is it going to not matter what gold does because silver moves at its own speed and own pace? That's something that I'm curious, and I'm really curious on the time frame of this as well. Do you think this would be happening sooner or later? And more importantly, what's going to be that driver or that force, that factor that breaks this apart? Is it going to be when people finally start realizing the fundamental values that silver brings to the table? Is it going to be something in the economy happening? Is it going to be simply just becoming more profitable as prices rise and new money comes in? Or is it going to be the actual uses of silver, the technological, advances we're heading in, how fundamentally useful silver is with electrical conductivity? I think that could be one of the biggest forces, especially looking at the surplus. I think the supply and demand is going to drive prices higher than anything else right now, in my opinion. I think that with the silver shortage happening and demand rising, once the supply cannot reach the demand, that would shoot prices up. And then obviously after that, prices would be forced up because the consumers would then be the producers at that standpoint. You would be able to sell at whatever price that you want because you're the ones in control in that situation. You're the ones with the power because you're the ones that have the asset that the big business and the corporations and the other investors need. And that's why people that invest in the precious metals are such a great opportunity, especially if you are stacking lots of silver and if you are holding on to it for the long term. Because in 10, 15 years down the line, just think about how much more severe this problem could be. When the American Eagle shortage happened earlier this year, that was something that was extremely terrifying in the economy, because that showed the first sign of a shortage. And that actually there was a lot of manipulation and a lot of things going on behind the scenes that goes along with that story as well. But that was a first glimpse into a bigger scenario that we could think of, because imagine that on a global scale, especially for people that need silver, that need to be using it in all of these gadgets, where it's not like they can just pass it up. It would not only boost the retail value, but it would also cause a lot of other panics, and it would start incorporating and influencing other prices in other markets across the globe as well. So gold, I think, is definitely having an important job to do. A lot of people think that gold is a different type of market as well. See, gold is more of a commodity, in my opinion, and silver is more of an asset. Silver's used more for technology, used more for the gadgets, more for, your cell phones, laptops. Gold is more for your jewelry, more for necklaces, more for rings, stuff like that. So for the markets to be moving together, correlating, it's interesting because they're used for different aspects. If they were both used for the same types of investments, then it would make more sense. But since silver is more used for technology and gold is used more for jewelry, it's interesting that the markets move the same, and that could be dangerous potentially when these markets are moving at the same speed, because silver is a much more fast-paced and highly reliable type of investment, where gold can be re-scrapped, recycled, reused, and that's the thing with gold, is that a lot of gold isn't being lost at the rate that silver is. A lot of silver gets lost in laptops, in cell phones, and all this stuff, where it's not recycled, where it's lost forever. So the supply is actually much smaller than people realize. But with gold, a lot of it's recycled and reused, so that actually allows a lot of it for the circulating supply to be replenished again, where that's not the same case that silver has. Silver doesn't have that luxury, so the supply for silver is actually much smaller than the supply for gold. Even though people like to say this silver is much more common, it actually isn't. So that's another thing you have to factor in when you're looking at price forecasts or price predictions. And I don't think price predictions are as accurate as they could be or should be, and this is because they're not incorporating all of the different things that influence prices. Right now, I'm on this journey basically to figure out how to more accurately guess or calculate where silver prices are headed, whether that's chart analysis informing the supply and demand, mixed in with the chart analysis standpoint of it, mixed in with the geopolitical fear, the dollar index, looking at all of these different things, looking at gold's price, where gold is headed, the gold to silver ratio. All of these things you can use to accurately incorporate the price of a precious metal. And I've been really trying to figure this out, but now since this has came up, silver is reliant on something, and basically it's at its legs to figure out where it's headed, because this is going to be our next indicator if we're going to see $20 silver by the end of the year, or maybe $17 silver by the end of the year. Regardless, though, the prices are still, for the long term, very, very, very much opportunistic, and highly have a lot of high hopes, and there's a lot of potential in these markets, especially looking at where prices lie right now. I think the gold to silver ratio will start closing down in the next 5 years. I think the ratio will probably hit around 70 to 1 in the next 5 years, and this is when silver's really going to start catching on and the momentum will start swinging. I hope people will start realizing this sooner than later, so you can still get your silver for relatively cheap, because if not, then you're going to have to be paying much higher prices than you'll be able to find today. But anyways, I hope you guys enjoyed this video. That was my little perspective, input, opinion on where silver and gold are headed right now, and also why these prices are relying on each other. I don't know if it's going to be good or bad. We will find out shortly, but I am curious what you guys think and what you guys have to say. If you do want to check out the other videos I posted today, they'll be in the top left and right hand corner of the screen. I highly recommend you check them out. I made some cool videos today. I think you guys will enjoy them. So I do appreciate you guys for tuning in. Make sure to smash that like button if you found this video educational, informational, or just entertaining. Also make sure to subscribe because I do post daily videos. If I think it's really important to stay informed in the world of precious metals and to always keep just become in touch and aware, enlightened, educated on what's happening in the economy, because it could affect how you invest your money. So thank you guys for tuning in. This was Silver Slayer. I will see you guys soon. Peace.